Portfolio Builder members, today is Friday, May 17th, and we've got a lot of exciting news to cover. We're going to do today's trade alert video a little differently. I'm going to actually show you how I put together the trade alert. First, we're going to start off by looking at all the news I've collected overnight that's critical for our trading decision today. We'll talk about our strategies, and towards the end of this video, we'll actually screenshot the two trade alerts, how to follow them, and input them into the track record. And for those of you who are a little bit new to the program, a quick summary of what we do. On Monday, Wednesday, Friday at noon Eastern, we release a trade alert to our basic membership where we're trading primarily the SPY ETF. SPY ETF is the most highly traded security in the world, averaging $16 billion a day with over $240 billion in assets under management, twice the size of the world's largest hedge fund. Plus, why we like it is because it has option expirations ending every Monday, Wednesday, Friday. This lets us invest in 100 shares of the SPY and then rent out these shares, lend them to stock speculators. And on a good day, we can make $100 a contract doing this 3 times a week. On a defensive day, depending on the market conditions, we can make around 25 to 50. And so while the upfront cost to do this investment strategy is around $30,000 to own 100 shares of the SPY, in a super conservative defensive strategy where we have tons of downside protection, we can pull out $3,900 a year. That's over a 10% return just by selling a very in-the-money covered call. That means we have super high probability chance of winning every trade, 156 trades a year, 25 bucks a pop. Now that's the very, very low end of what we'll generate because I do like to aim for closer to $50 to $100. Sometimes we're getting up to $125, $150 a contract. But look, if we make $50 3 times a week, 52 weeks a year, that's $7,800 of income per 100 contracts you own, which is close to a 30% annualized return without compounding any of your profits. And when we're pulling in the really nice paydays, $100 or more, that's $15,600 a year of income, and that's just from letting people borrow our shares. Now, our trading strategy is very easy, very repetitive. It's a lot like watching grass grow or paint dry. Monday at noon Eastern, we simply roll over a covered call. Now, I haven't finalized the decisions yet today, but our trade that is open from Wednesday was a in-the-money covered call that is sitting on a lot of cushion, and it is up. We've generated a profit on the underlying asset, the SPY, and we will buy back our covered call for a small loss. And I'll show you how that works out. With this strategy, if the SPY goes up, we never lose. However, by writing in-the-money covered calls during times of risk, we can actually make money if the market goes up, flat, or down. And so we'll go over that in great detail today because there is a lot of risk in the market. So after we buy to close the most recent covered call, the next step is to go to the next expiration date. And so you can see May 20th, May 22nd, May 24th, May 28th. That represents the paydays we're going to be picking up for the rest of the year and for the rest of time. This is a strategy not only you can do for your own portfolio, you can teach your kids to take this asset and continue this strategy. Rather than hoping the S&P 500 will go up for the rest of your retirement, you can stop worrying about that. All you need to know is this is the most popular asset in the world, and there is tremendous demand from stock speculators who will pay you for the right to gamble on it going up. So it puts you in a situation where if it goes up, that's great, everybody wins, but if it goes flat or down, we still win, and that's what's important. And so Monday, Wednesday, Friday, again at noon Eastern, we do the trade. It's in written format, and it's also in this video format. Now, as a bonus, when you do upgrade from a free trial, we give you a copy of this spreadsheet. You don't have to use the spreadsheet, but if you want to, it does help you keep yourself very organized. We also have a very simple cryptocurrency portfolio. This is to represent no more than 5% of your assets. So if you look, when we started this strategy out, this was based on a $500,000 portfolio starting on December 10th And so this portfolio has had to weather not only the Christmas massacre that shortly developed right after we launched this portfolio, it's also had to deal with a skyrocketing market up and then the recent pullback of 5% in a week. And so at the end of the day, what our strategy does is it takes the volatility out of the market. We don't make as much money when the market goes flying higher, but we sure as hell don't lose money when the market goes down. And so you'll see why this strategy makes a lot of sense if you have a large portfolio size and you're ready to stabilize your income going into retirement. Now on the crypto side, it's a very simple portfolio, and these are all coins that can be held inside the Robinhood phone app. We highly recommend everyone following this program join Robinhood. It's a free phone app. They pay for all of your commissions. This is the fastest growing broker-dealer in the world. It's valued at $5 billion, and it is taking out its competitors. It's doing this by paying for everything: option assignment, option writing, stock buying. Plus, it has these cryptocurrencies. Now, what's really neat about the cryptocurrencies is that it's not actually the real cryptocurrencies. It's just a proxy. And these accounts at Robinhood are federally insured. So now you don't have to worry about your coins getting stolen or any of that nonsense. So this portion of the portfolio, which again started off only representing 5% of our portfolio, has climbed to a value of $92,000. And we'll talk about what's been driving the cryptocurrency rush this year, what caused it to have a little flash crash last night, and when I'm going to take some profits on this portion of our portfolio. Now, I do want to take a look at some other products we have. On Tuesday, we publish a program called the Diamond Program. And this is trading the same stocks that you would actually end up owning from the SPY ETF. So the SPY ETF is just a ETF fund that collects everyone's capital and then automatically purchases the S&P 500. And if you go look at what that really means, you'll see that the top positions where most of the capital flows to are these companies. Now, I have taken out Google, Amazon, and Berkshire because they're just too expensive to purchase 100 shares for most of our investors. Now, this portfolio ends up owning 300 shares of Microsoft, 100 of Apple, Facebook, Intel, Cisco. And again, Cisco is in a great spot now that Trump is targeting Huawei. So they'll have a free path towards taking over the 5G network in America. Comcast has 200 shares, and then Bank of America and Wells Fargo. Now, I will point out, if you look at the under the hood of Berkshire, they primarily have half their capital in Apple, Bank of America, and Wells Fargo. I know there's a lot of hype about the Amazon purchase recently, but that was a tiny, tiny position that was put off by a subsidiary that it's not really Buffett's decision. So we'll talk about that in a minute. This portfolio is delivering twice the returns, trading Tuesday only at noon Eastern. And so why does it have twice the returns? Well, there's a few reasons. Number one, the individual securities held in this portfolio have a higher level of volatility. That just means they jump up and down more than the S&P 500 does as a whole. And so because of that, the options you can purchase on these stocks cost a lot more. In fact, they cost about 2 to 3 times more. So this portfolio has been able to collect about twice the yield from writing covered calls against these underlying assets, and it did it by not buying the SPY, but buying what the SPY would buy for you. A few other notes: these are the companies that are the most profitable, so they have the most cash to put back into, you got it, corporate buybacks. They have the best credit rating, so they can get the most loans to also fund all their operations. And plus, these ETFs, which are taking out hedge funds and mutual funds, they flow their cash straight into these securities directly. So that there's a lot of support for these, a lot of demand, and a higher yield. So if you do have a $150,000 portfolio, you want to trade a little bit less, Tuesday, noon Eastern, that's when this program comes out. Now, anybody on a free trial, if you do upgrade from the free trial to the basic program, we're going to give you 30 days access to this Diamond program so you can decide what makes the most sense to you. Do you want the super safe SPY strategy that trades 3 times a week? It makes less. It's only aiming to make 1% a month. We've averaged a little bit more than that. But what we really don't want to do is show any drawdown. So the only times we've actually had drawdown were when the market had pulled back more than 5% in a single week. And the first time that did that in 2019, we were only down about 1%. But the good news is when the volatility spikes, the cost of call options skyrockets. So then within 3 trading days, we made back that 1% because the rent to borrow our shares quadrupled. So the money we made normally in 4 of these trading events, we were now making in every trading event. So if you're the sort of investor who hates losing money, but you don't mind making less than everyone else when the market's going up abnormally quickly, this is the right strategy for you. Now, if you do want to make a little more money, but still have that defensive posture by selling in the money covered calls, and we'll talk about why that puts you in a position to make money regardless of market direction. The Diamond program makes a lot of sense, but you do need at least $150,000 in capital. Now, most brokers will give you 1-to-1 leverage, and because we're trading this so defensively and in a way that we don't get stuck holding the bill, such as people who write put options, we're doing the opposite of that. And then finally, we have our Thursday class. This is the Whale Club. This one's really boring. If you really hate to lose money and you're happy with very small returns that have very low drawdown, this is the right portfolio for you. It's also one that I look for more patient investors. So not necessarily will this have a smaller return, but it's just not going to be chasing the hottest, greatest stocks all the time. So right now, this one has been trading the TLT since conception by selling that covered call. And we're just looking at where Wall Street's putting all the open interest, where they're writing all the covered calls, and we're just being a parasite jumping on top of where Wall Street is. So it's very simple. It's very easy to follow. This portfolio is up 7.3%. And the rush into the safety haven of the TLT, the 20-year Treasury, is just going to continue and continue as long as this trade war goes. Now, the reason you do need to have $1 million for this portfolio is because what makes this really exciting is the moment we transfer from the TLT into owning this basket of stocks, which is Microsoft, Apple, Amazon, Google, Facebook, Bank of America, Wells Fargo. Similar to the Diamond portfolio, but now we've brought in the heavy hitters, the Amazon and the Google. Now, Berkshire is not included, but that's because Berkshire's portfolio is basically just Apple, Bank of America, Wells Fargo. So we felt like this is actually a more accurate depiction of what you would get inside the SPY ETF or the QQQ ETF. And so again, we want to own the stocks that have the highest demand because now we're no longer trying to hope for stocks to grow and go up in value. Instead, we're going to sell call options to speculators for almost guaranteed profits with lots of downside protection. Now, what I do is I wait till around 11 Eastern to start producing the trade alert, and then my team at the same time is taking all the content, converting it into HTML, and then getting it out to all our members in video format, Telegram message, text message, and email. So we get this out in all methods possible. And so what I'm doing now is getting you all the important news prior to actually printing the actual trade alerts. So let's take a look at what we've collected since yesterday after the close and how that's impacting our trading decisions. So the big news is that the Chinese are not going to continue the trade talks at this point as Trump is targeting Huawei. And that's all a big fight over this telecommunications, spying, and so it hit the Asian markets and emerging markets very hard last night. And so we're waiting to see, will these tariffs really create problems in the two economies to show deteriorating profit margins in the corporations, which is what the big fear is. So we're looking at some data in from the auto loan market, now at 1.3 trillion and reaching a 4% delinquency rate, which is bad. Other signs of exuberance that I've been following, all the IPOs recently. Beyond Meat has been doing well, which is comical, but Pinterest, Uber, Lyft, all getting smashed. Then we have this Quora valuing itself at 100 times its revenue, not even its earnings. That's insane. The good news on the trade war front is that they did delay the European car tariffs for now. This is a fellow who represents somewhat of a voice from China. Shanghai Stock Exchange dropped 2.48% Friday due to worry of an overall escalation of trade war, but Huawei-related stocks soared. This is a vote of confidence, so this is escalating. Here are the products that are yet to be tariffed. Of course, if Apple is to be hit, that would be big. And of course, that is the biggest item that is not yet tariffed. Sterling falls as Brexit talks collapse. Here's a look at the 30-year Treasury, which has just been in free fall, which for our whale members, that means the TLT is going to keep going higher as money continues to flood into the Treasury market. Crude oil continues to climb higher, which creates inflationary pressures. And then this is the big one that has been driving the Bitcoin rally. First, we had the Turkish lira trying to be pegged by the government, and that allowed for its people to see the problem and just get out while they could. And that was earlier in the year. Most recently, ever since Trump said he's raising the tariffs to 25%, we have seen the Chinese devalue their currency to help offset the cost. So the way this works, Americans buy products from China. Now the products cost less because our dollar goes a farther distance, but they have to pay the taxes on these imports. So the Chinese are devaluing their currency to help offset this tariff. But what's that mean for Chinese billionaires? Well, it means they just lost a good 10% of their net worth. So they have been selling the offshore yuan as fast as possible, and now their finance minister is saying they will peg it at 7 to stop this. But yeah, they are flying into cryptocurrencies to try to avoid losing the value of their purchasing power. Here's a look at the Shanghai Composite, down 2.48% last night. Things are definitely heating up. The S&P futures market was down this morning. Now, we did get a strong rally after dropping about $2.50 from yesterday's close, today's open. Here is a look at cryptocurrencies this morning, and it did crash as much as 6,000. This just shows you how volatile and illiquid the cryptocurrency market is. So it's a great buy and hold strategy while we have a trade war, while people are fleeing from major currencies. This is a definite easy pick right now. But when this trade war does come to an end and the tariffs do go down, central banks start to tighten monetary policy, I think we might see the next big crash in cryptocurrency. So we are looking for a potential time to start offloading our cryptocurrency portfolio for a big profit. There was rumors that President Xi and Trump would talk at a G20 meeting in 3 weeks, but the China Foreign Ministry is declining that at this time. People's daily wartime talk from China. The trade war can't bring China down. It will only harden us to grow stronger. What kind of storms have not been seen? What bumps have not been experienced for China with its more than 5,000 years of civilization? China's central bank will not let the yuan weaken past 7 per dollar, which is where we're almost at. So that does beg the question, will the demand for cryptocurrency start to slow down or even stop? If it does get pegged at this level, the pain may be over. Chinese are killing orders for pork and soybean. Here's the look at the currency, once again flirting with that 7 level. And so if we can really slice 1% of China's growth from 6% down to 5%, this would have huge repercussions around the emerging markets and then eventually flow into the American market. So this is looking a lot like 2018. Saw the emerging markets weaken. We saw small economies start to plop one by one, and eventually by October, we saw the S&P 500 take a big hit. Hinhua says China may have little interest in trade talks with the U.S. right now. And again, this is a little clip from last night. There was a flash crash in crypto down to 6,300. We're back to 72. And now this is the onshore one, which is even getting close to that critical level now. And for those of you who don't know about this 5G network, this is insane. This Samsung phone outside of a hotel was downloading at 1,000 megabytes a second. Now that video clip was at 826, but that is way faster than my direct connection here with Comcast. So this 5G is huge, and there's going to be a big battle over who gets to develop this technology and spread it around the world. And so meanwhile, America has created prohibitions against Huawei, which is China's champion telecommunications company. And this is going to just continue and continue to escalate. But companies like Cisco are benefiting from this potentially. Meanwhile, Pinterest falls as much as 14% after earnings report. So this is always the signs of the bubbles getting towards the top. We get these big IPOs that are just crashing the same day they go live. The Kospi is a good leading indicator for, this is the South Korean stock market heading down. It's been somewhat a good leading indicator. Brazil is now flat on the year. And so the Chinese have just been copying everything they can from America, including stock buybacks. So it would appear the only people really participating in this rally this year was primarily corporations buying back their own stocks, zombie buyers. China has reverse engineered everything emerging from the U.S., even its record stock buybacks. Now we're getting closer to the time where we're going to crank out the trade alert, but a few more things I want to show you guys that we take a look at every day. Dollar index, this is extremely important for all three portfolios. And so right now the trend is that the rest of the world is really struggling, especially with the tariffs, which could potentially slow down China, which will slow down all of the emerging markets it's partnered with. So this has been the big play in our whale portfolio. Very easy, low volatile play on the TLT, which has delivered a 7% return since 12/13. And we actually missed out on some of the gains. If we do look at the covered call track record, whenever you see the big loss on the covered call, that doesn't mean we lost money. It just means we made less than we would have owning the underlying asset. So there's been a number of times where we actually made less by owning the covered call. And of course, there's been plenty of times where the covered call helped reduce the volatility. So that's the main idea with the covered call, is we can take the volatility out of these popular products and generate a very consistent, safe return. And something else I do want to point out is the inversion of the front end of the treasury market is selling at a higher rate than the 3-year and the 5-year. So that is always a warning signal. And if we do take a look at the S&P 500, this is where we launched the portfolio. You would have thought it would have been a great day to buy the dip, but oh no, we had to go through this huge crash and then miraculous recovery. We've suffered through this pullback here, and the end of the story is that we're able to pull currently, and this will go down a little bit, so I'll show you guys how that works. But every time we cover the covered call, we'll know our true return on investment. But we've had very, very, very little drawdown and very, very, very consistent profits. Now here's a look at our actual trade alert document, and we'll go over it in detail. Brace for impact. Now what I like to do is take a screenshot of our return from each period so we can see the growth and what kind of profit was generated. Because there's two ways we can generate profit. We either generate profit from the covered call losing its value, because we sold the call option, we're hoping the call option loses value. That means we get to keep the premium. So that's one way we can generate profit. That typically happens if the market goes flat, slightly up, or slightly down. Now, if the market flies higher, we're going to have to buy our covered call back for a loss, but we generate the profit on the underlying asset. So that was the case from Monday through Wednesday. We actually had to buy the covered call back, which you can see right here, the most recent trade. We had to buy that covered call back for a negative 26% loss, but our account value, because the SPY went up in value, generated $1,802 of profit, and that was just for Monday through Wednesday. So our screenshot of the profit went from $31,727 up to $33,529. Okay, so now I've inserted today's trade screenshots. So we're buying to close the 280 strike. Again, we generated the profit on the underlying asset, and we'll look at the before and after of our P&L in a minute. We're going to sell to open the 285 strike, which is $2.17 below the current trading price, and they're going to pay us $2.70. So we're agreeing to sell our stock for a $2.17 loss when we go into this trade, but we're doing that because we're getting paid around $50 profit per contract if the market does go higher. So you just take basically 79 minus 17, and that's $62 of profit per contract. Now, if we can do that 3 times a week, 52 weeks a year, that's $9,672 of profit, or a 30% annualized return. Now, let me ask you this. Do you think the S&P 500 is going to trade to straight up to 325 this year? Excuse me, I did the math wrong. To get this type of return where we have protection to the downside, the SPY is going to have to trade to $369. So it'd have to trade all the way up to here. It's certainly possible. But it could also just as easily bobble around like it has for the last 18 months. And if we look at the S&P 500, where has it really gone? It really hasn't gone anywhere over the last 2 years. So now we're going into a trade war, which might slow down global trade. So what makes you think that we're going to go to higher highs? It's very improbable at this point. And so that's what makes this strategy so smart. We're now protected to the 285 price on the SPY, and if the market goes higher, we make our guaranteed profit. If the market goes sideways, we make the same profit. If it goes slightly down, we make the same profit. So it puts you in a very nice situation. Now, why did we pick this particular strike? And one more thing, I do want to point out, we are recommending at this point to per 100 shares of the SPY you own to buy to open 1 July 19, 2019 264 put option. This is only going to cost you $1.83, so it's less than 1% of your portfolio. If the market does tank extremely quickly, this will really save your butt. This thing can skyrocket up to the price of $10 to $15 in no time. So while we're not trying to get rich from it, we're just trying to protect our capital and be able to potentially add 2 to 3 complete percentage points to our profit from that little trade. So why did we pick the 285 strike? Simply because Wall Street picked that 285 strike. So we're basically trying to be a parasite living on a whale, just eating all the stuff that collects on his skin. Wall Street is extremely smart. They're pouring volume into the 285 put option. That means they're willing to buy a tremendous amount of shares of the SPY ETF if it does go to 285. So that's what the open interest means. There's 95,000 contracts open, with 39,000 contracts being purchased today. So that's a very good resistance level for the SPY ETF. And on the other side, we have a huge amount of open interest sitting right above this 286 level, which means people will sell their shares at these prices. So what that tells me, between now and Monday, we're pretty much range bound. It would take a massive buying or a massive selling flow to change our current price levels. So this sets us up really nicely. We're getting enough profit for a 30% plus annualized return, and we have downside protection. How can you beat that? Okay, so the last thing to do today is to compare our results from Wednesday through today so we can see the profits that have accumulated, and then we will insert the new covered call. So to do that, you can see I had to buy back this covered call for a 53% loss, which is okay. Again, if the SPY goes up, we're going to show a loss on the covered call, potentially, and then generate the profit from holding on to the underlying asset. So here's the new profit. I've taken the screenshot, put it over here on our trade alert, which you're about to get. So we went up from $33,529 to $34,209, a $680 gain from Wednesday through Friday. And that was with a super defensive trade. We were way in the money with the covered call. We had way more protection than we do today. And now, again, we are just trading from Friday through Monday. So there's not any open days on the market to worry about, just the futures market Sunday night. And again, if you do want to click on this link, you can view our track record. Now, the last step is to insert the new covered call. So we chose the 285, and the credit we received was 279. Now, this will make the profit look a little bit higher, but realize we have a $2.17 loss that will come off this profit, so it will jump up a little bit. But once we cover it, we'll be back to our true profit. So this is a very boring, slow, repetitive strategy. And for those of you on a free trial or even on the expired list, call Dean at 505-322-7515. We have special deals only available over the phone, so you can save money on membership. Just a quick review, the basic program retails at $997 a year. We can save you some cash if you call Dean right now, 505-322-7515. When you do upgrade to a basic portfolio, you will also get a 30-day free trial into our Diamond product. You'll also get 30-day trial into our Whale program. And you're also going to get access to our cryptocurrency portfolio. So if you are holding crypto and you want a good timing on when to get out, that's going to be one big benefit. So you also get the spreadsheets, you get the trade alerts. Every day at noon Eastern is when our trade alerts come out for all of our products. We also have a live webinar Tuesday and Thursday at 1 Eastern with all of our community. There's usually around 20 to 30 people live on those, and that audience is quickly growing. So that's a wrap for today's trade alert. I hope you enjoyed it and learned a lot from how we get to point A to point B on delivering this trade alert. And look for our next alert Monday, noon Eastern. Thanks.